Hello. Welcome once again to the channel where we time travel, predicting the future in price on a macro scale, on a weekly. We even go as far as a 12 month, which is a 1 year, going into the 3 month, and also the daily time frame, where we anticipate price delivery for the upcoming week with extreme precision. You see, it delivers on the daily and even on the 60-minute time frame. This is how you walk through expecting what you'll be anticipating. So, wasting no time here, we'll get into the real video now. This just concluded the week was NFP. The non-farm payroll was released on Friday, which was December 6th. This is December 7th now, and this is Saturday. Let me just show you through my time here. We have here December up at the top left. You can see December 7th, Saturday. So here my time is 8 p.m. and you can also see here market closed. We can open in day 14 hours. Market open in 1 day 14 hours. So now the video will be started now. Last week I told you before the market opened that we had the price this way. This was the candle, and I told you salient levels, that is important levels where I'll be anticipating. Okay, this is what you'll be walking through going into next week. I first and foremost, I told you here this week, this was how it was, and I told you this a little bit kind of like, look, let me make it a zoom so you can see it clearly. Now here you can see this level here, 1.26676. And before I proceed, I'll be doing an additional pair, probably one or two. So you just stick to the video. If you don't trace the British pound, I'll be touching on other forex pairs also, and I'll be, if time permits, I'll also communicate my thoughts on what I anticipate for the indices. Okay, so this was what I told you before this week opened. I told you 2 weeks ago we had this week's consequent encroachment. So body closure above here is a what? It's a plus for buy side delivery continuation. And what happened? Body closed above here. I immediately told you, okay, we'll be going higher. To here, this inefficiency, I noted it here, right here. And I told you here it's a what? Order flow determinant. It's gonna be drawing on liquidity. Now, we opened the week, we went low into some random level. No, I'll be telling you that level in the daily time frame. So I'm going to show it to you right here, and that's what you'll be looking at right now. Here we have this inefficiency here. This was Monday's trading right here. So this week was literally like this. There was nothing of Monday trading. Then I outlined this inefficiency. Let me make the hue a little bit thicker. And that's a BC, that's buy side imbalance, sell side inefficiency. It's void of sell side delivery. It has only buy side delivery, only in one pass to the upside and delivering buy side liquidity. Sorry, not liquidity. Now, this inefficiency, I told you what should happen to it. I told you, look at it, I said it's an order flow determinant. Literally, one thing you should know in this channel, once I say order flow determinant, is a key level. Like, this is what makes you know, are we going up or down? Market only does what goes up or down. Sideways, sometimes when you want to trade that level, no, want to be trading a ranging market. That's a consolidating market. Like, you don't want to do that. But market generally ups or down. So when I say order flow determinant, it means this is what determines if you'll be seeing a higher price on this market, or if you'll be seeing a lower price, or if you will sit still. That is a potential low probability of each direction, which means you might be consolidating. Now, I told you this performance is very pivotal. That is very important for price delivery going into December. Yeah, so I think December 1st was, let me see. Yeah, we were in November 29th, that was Friday, and that was it. I think December was about Sunday, if I'm not making a mistake. So that was it, and I said explain what this means. I already done the explanation to you, okay? So priced open, okay, and delivered, okay? On Monday we came in here into this inefficiency, one pass. Tuesday we did what? Second time. Wednesday we did what? Took out the low of Tuesday, third time, and what happened? Fell lower? No, went higher, up, and that was it. Now, I know you don't believe me, like, oh no, this is. So I'll play in a recording of previous week's top-down analysis where I actually told you this before it happened, and you actually hear for yourself now in a few seconds. So just pay attention. In a second, you will listen to it and you will in fact see for yourself. CB now is overlapped. I want to see if it wants to act as a support to send price higher. How will I know? That's why I have this inefficiency. This is a very key determinant. That's why I put it here as order flow determinant. It's a daily BC. Its performance is very pivotal for price delivery going into December. Explain what this means. What this means is that if price comes in here, come Monday or Tuesday, and enter into this inefficiency, which I anticipate is very important. What I mean, if it comes in here and it sends price higher, it means it's acting as a support to send price higher, and I don't want to see its low get taken out. I'm trying to explain this to my best possible capacity. We come in here Monday, Tuesday, here, and we didn't even close below the consequent encroachment. That's the midpoint. And we reject. That's me straight. Am I coming here one more time? And then we keep running, okay? It might come in here one more time and keep running. That might happen. Hello, welcome back. You heard that yourself, right? You did. So it's not like I'm just trying. No. It's not church. I'm telling you, I'm forecasting the future here in price, and it's done with a great precision. This draw on liquidity was also told to you here. We had the first draw on liquidity here is this one. It's tagged the weekly buy side draw on liquidity. That's what I told you last week. The reason why I'm doing this is just like the commentary part. So I'll be going to what I'll be anticipating this coming week after doing this commentary part, because I need to delete some levels on this. Like there's so much of annotation, so I want to get rid of them before I begin my forecast. So you just stick to it. I'm gonna do it. I'm gonna talk about that. The weekly buy side draw on liquidity was annotated to you. I called this level 1.27502. I called it like specific. I'm not saying a zone or a range, a specific level. And well, let me just show it one more time for whoever was like, no, it's not, because somebody will like, no, this is not possible. There's somebody will be like, this is not, and that's no problem if you are the one, okay? So just listen again. Let me just show you where I actually called this level. This is my YouTube channel. You can check the video. I will drop the link in the description. So just listen a second again. See this buy side gets taken out, and keep in mind, hello, keep in mind, this Friday is NFP. It's NFP. So this is December 3rd. I'm doing this video December 3rd. So it's NFP on Friday. You don't want to go in all like you want to be very careful. Even if you're a swing trader, you can get pressed in like a retracement very deep. So you want to be very conservative and not want to be too aggressive and just gamble into it. So for NQ, I told you my draw on liquidity what I had. Okay, so I think that should be enough. Really, it should be. You could see that there's no how I can manipulate and delete candlesticks on this. I don't know if it's possible. Can you delete candlesticks on your trading view? And this is not market replay. You can see, I told you here, it's showing market is not opening, and it's like you can literally see it. This is how market is in the weekend. We're not trading. Probably I should go to the 1 minute time frame to show you even better. Let's make it auto fit. So now, do you see it closed? Like price is not moving. This is Friday, 16. That's 449. Like price is not. We closed for the week. Okay, I can even show the price line for somebody. No, it's not like. So price line. That's the price line, and also the price we closed at last week. Symbol last. So that's the symbol. I can do so much, but really, if you just want. This will not be enough to convince you that, oh, no, it's not possible for someone to have this kind of precision. Fine. Just, deal with it. Enjoy yourself, okay? But for those who are like, okay, wow, I want to be able to do this. That's why I'm doing this video. And yeah, we delivered to those levels. And also this inefficiency was told to you how it will what? It will be a drawn liquidity for price. And many videos, I made it in midweek analysis. Like I did a kind of video like, telling you what I'll be expecting. Let's say today is Wednesday. I tell you on Wednesday, like, okay, this is what I'll be expecting for Thursdays. In this video is like a midweek analysis. I did lots of that. So today, expectation for today, so I can delete those level since I've already clarified it. This was the weekly buy side. For this coming week, usually we go, those who have been along with me, we start from the monthly time frame, okay? And I also said in the video, monthly time frame, we go to the monthly time frame. It gives us a very, nice overview. Now, look very closely. Price had been trading lower for 8 weeks. That was 2 months. Throughout October and November. What happened December? Going into the closing of November, price actually retraced so deep, which means it only came low into this inefficiency that I already told you beforehand. Don't believe me, I won't show you that. But really, I told you before. If you want to check it, there's a playlist on this channel. It's weekly commentary and pre-market opening analysis. I think that's the name of the playlist. I have a couple of videos here, not so much, but it's very probably 10 or less. So you can check those videos. As at now, it's not so probably 10, and you will see when I actually told you this inefficiency. That was about October or November. But this was the inefficiency we drew into it and we reject immediately. Now, what did price did? Price opened, okay, and came low to this consequent encroachment of this candle still. Consequent encroachment is the midpoint of an inefficiency or of a tail or a wick of a candle. So I said consequent encroachment is the midpoint of an inefficiency of a wick or of a candle still. So price opened here at December. We came low. We didn't actually reach the consequent encroachment at 1.26118. We fell a little bit short, which actually indicates momentum. It's an indicative signature of strength in price. That's why we had buy side delivery for about a week or two now. Now back to the weekly time frame. So if you're gleaning some insight, you can just give this video a thumbs up. Feel free to comment your questions and thoughts, and also remember to subscribe. Here we have this inefficiency here on the weekly time frame, which I already just showed you. That's a draw, and it's also a what? An order flow determinant. So you want to pay attention here. We have now, where are we going to retrace to? Because usually if we're going for buying the buy side delivery, we should have a discount retracement before a premium draw on liquidity. Now it's not always so on every week, because some week actually open and don't even retrace into discount, just extremely, and we go high to buy side delivery. Now the discount retracement level, pay attention. These are levels I might be calling next week and telling you I did this for you, so you can note it down if you trade this pair. That's the British pound. Now the first level here is the tail upper quadrant. That's the 25% of the tail level. If you divide the tail of that candle into 4, we'll have the upper 25%, the 50%, and the lower percent, which is about the 75% before the full 100% of the candle's tail. The upper 25% comes at 1.27043. That is the previous week's tail upper quadrant level. For extreme bullishness, this would keep higher time frame body closure at or above it. What I mean is, if price is going to really deliver buy side, price would not want to close here on a higher time frame basis. And any level you see me annotate or outline on a weekly time frame, higher time frame is a daily or 4-hour basis, not the 60-minute time frame, the 4-hour or the daily time frame. So if you see a 4-hour candle failing to close below 1.27043, it's telling you that there's going to be strength. That is Monday going into Tuesday for this coming week. This would keep higher time frame body closure at or above it for a strength, but it can actually close below it. Okay, so if such a signature occurs, you understand that there is strength. But if it closed below it, how far below it should we close for us to know that we still stick to the underlying time frame bias rather? We'll have this. The next level is the consequent encroachment, which I told you is the midpoint of an inefficiency or of a candle's tail or wick. The midpoint of an order block, mitigation block, or breaker block is called main threshold, while the midpoint of an inefficiency, a candle or a wick, is called a tail consequent encroachment. I will say that again. The midpoint of a block, which is a mitigation block, an order block, or a breaker block, is called main threshold, and the consequent encroachment is for a weak tail or inefficiency. So we'll have the tail consequent encroachment at 1.26753, which is the midpoint of previous week's tail. So higher time frame bodies should respect this level in terms of body closure. Like you don't want to see body closing above this, below this level rather. Now, to be honest, with my experience, I really don't think price should trade down to this level, okay? Because if we're really bullish, we shouldn't have a business coming here. But for the sake of flexibility, because there could be manipulation, as you know, there could be news release and every kind of things, I give a permission and an allowance for price to come in here. But it should be on the basis of a week. Like the tail can just come in there. Remember, the wicks do the damage. The narrative of price is actually in the body. So a body should never have a closure below here. Even if it closes below the upper quadrant level, it should never close below this consequent encroachment for high probability buy side delivery continuation. So those are the two discount levels. It's as simple as that, just two levels. You watch that. I'll be going to day time frame to explain better, but for now, let me let you know what my draw on liquidity is. The easiest draw on liquidity, which is like a low hanging fruit objective. The first place you look for is the consequent encroachment, which is the midpoint of this candle's wick. I've done videos where I actually do drawing a consequent encroachment live, but for the sake of time, I want to make this video as short as possible. I won't be doing that here. I can make an isolated video separately for consequent encroachment, how to get it. But what you do is just to put your Fibonacci from the candle's close to the candle's high for a wick, for a tail from the candle's open to the candle's low for an up close candle. Inverse is going to be set for a down close candle. Now, if you don't understand that, don't worry about it. I can make a video if you want. Just comment and you'll do that. The weak consequent encroachment here is 1.27765. That's the upper portion. That's the the lower one is the tail. The upper one is the wick. Okay, you can call both of them wick, but for clarity's sake, the lower one is the tail. The upper one is the wick. Now, just as told to you 2 weeks ago, which was here. Remember, this was 2 weeks ago. That was week November 18th. It was told to you that body closure above this week is a plus. That is, it's a supercharger for buy side delivery. It supercharges the fact that buy side will actually deliver, and you saw how had the up close candle 25th November. Now the same narrative is going to be transposed to this current week, that is anticipating the next week that has not opened, because this is Saturday. Market will be opening Sunday by 6 p.m. New York local time. So just as you know, 2 weeks ago I told you body closure above a week's consequent encroachment is what is an indicative of strength in price. So you just transpose the same bias put the same narrative here. What do you want to see as a goal on signature? Now, this can be used as a draw on liquidity. Let's say Monday, Tuesday, or even Wednesday. Sometimes the low of the week forms on Wednesday, but usually Tuesday. On rare cases, it forms on Monday, but usually Tuesday. Now, if price draw to this discount level I told you, you were anticipating a draw on liquidity. That is, you can be buying from that level based on your model. If you're a swing trader, position trader, day trader, or even if you're a scalper, you can just take some little scalp intraday or interday, depending on your session. With your model, you can target 1.27765 as a draw on liquidity. Then you anticipate a signature of a body closure. You know, I told you for the tail, you don't want to see body closing below that constraint encouragement. But for this week, you want to see body closing there as a confirmation to signal to you that I'm going to go higher. So you read the information from price. Now, once you begin to see body closure above 1.27765, that can happen any day, probably Tuesday. Not Monday usually, but probably Tuesday and Wednesday. Once you see body closing above this 1.27765, then you anticipate the high of previous weeks, which was previous week's high was, that this just completed the week, which was NFP, we had the high at 1.28115. Let me just outline that level here. That's the level at 1.28. This is one to know it's 1.5. 1.28115. So that's the buy side draw on liquidity. You know, pay attention now, because next week I'm going to be telling you if price delivers this way. This is just my speculation. I don't have to be right, but there's a 90% accuracy. If you watch all the previous video done, you can see it actually delivers like I anticipate. So before you come next week and say, no, we didn't tell this beforehand, you should just note this timer on this video and actually come back to it next week and see if it actually delivers. So we'll have 1.28115. That is the buy side draw on liquidity. If you want to be too overzealous, like you want to be very, you want to actually have a higher draw on liquidity, then you can look left. We'll have an inversion fair value gap. That's a BC. A BC that was actually disrespected and traded through by a down close candle. That was at November 11th. So before I proceed, you can comment your questions. If you have questions, just let me know what it is. If I can answer it through a comment reply, I will do that. And if it requires a video, I could create a time to make one going into next week. So drop your questions and whatever, and remember to subscribe to the channel, and you can also share with your colleagues if this helps you in your trading. So here's the inversion fair value gap here. It was actually disrespected. Usually you should anticipate it to act as a traditional BC. That's a trade into it to send price high. Okay, its failure signals to you a weakness, but now we are in strength. So if you want to be overzealous, which I don't think is necessary, you should aim for the low hanging fruit objective. And what I mean by low hanging fruit objective is, if you walk down, let's say you walk down a mango tree, there will be some fruit which you could actually use your hand to pluck down, but there might be some other one which you might need a stick or you might throw stone. The one you can use your hand to just take is what I call a low hanging fruit objective. Like an apple tree, you can just use your hand. So you don't have to aim. You don't need all the the skill set to climb the tree. To just take the one easiest to you. That's your aim here is to be profitable, not you want to deliver the best possible. No, you just be profitable. So the normal where this is my contentment level, is actually 1.28115. Well, sometimes price might actually exceed that. So this inefficiency is what you read. For those of you who want an exceptional delivery, this inefficiency is what you'll be looking for. So going to the daily time frame, I spent so much time on the British pound. There's not much of narrative here. Sorry, there's not much of extra information here, but I want you to look left. We have this 1, 2, 3 down consecutive close candle, and when you see consecutive down close candle before a displacement, is a order block. Now, what validates this as an order block? I told that in the video before this one. That was previous weeks before it opened. This was a BC, buy side imbalance, sell side inefficiency. What makes this a BC? It is void of sell side delivery. It's only offered buy side delivery. Now, we had this down close candle, we displaced above it, we came into this inefficiency. This opening price immediately acts as an order block. Wow. Yes. So 1.26818 is a bullish order block. So now it's not like a potential. It was initially a potential because we were watching price previous weeks as it was changing direction, but now it's actually a valid one because price actually reacted off here. You could see there was no body closure inside of this inefficiency. Also look left. If you are not used to, you don't know how to use an inefficiency, you don't know how to use a bullish order block, this is a bullish breaker here. You might not see that, but let me just extend it to the right. Okay, I think everyone should see it this way. Let me make it, yeah. So that's a bullish breaker, and You understand a breaker should what? It should send price higher, and the most sensitive point of a breaker is the main threshold. Remember his main threshold now for a breaker block. For an inefficiency, it was consequent encroachment, but for a breaker, it's main threshold. Now the main threshold is just, you can simply do that. You just go to your settings and add middle line. You can see, do you see anybody closing below? The middle line is this white line, okay? Take note, this white line you see dotted. Do you see anybody closing below that? No, but it went below that midpoint, which was the main threshold, but it didn't close below that. Now, how will you know this would actually go beyond the main threshold and won't close below that? Let me take this out first, so you can look very closely. Look left. We'll have a CB, which is a sell side imbalance, buy side inefficiency at this left corner. Let me make it visible. You'll see it now. So this is the CB. This breaker is actually so annoying to my eyes. Let me try to make it the way it was before. Okay. Now you can see this CB. If you have a breaker block, which is a low, high, and a lower low, then a displacement to the upside for a bullish breaker, inverse is set for a bearish breaker. If you add a candle that does the stop run, which is the one that went down, which is, the first one, this is the first one, second, the third one, the third swing, the one that does the stop hunt. If you see an inefficiency there, that will be the sweet spot for a premium or discount Q zone. So now you'll be looking for a discount Q zone to trade to premium. So this inefficiency was actually what price will come to. For that reason, in this case, you won't be using the main threshold for the other block. You'll be using this level as a sweet spot for entry. And what happened on Monday? Monday came into this level. Also, Wednesday came into the level. If I actually extend it to the right side and make it 300, okay. Yeah. Tuesday also came into this level, and what happened after that? Failed? No. Immediately it rallied. So this is a breaker block for those who, you don't know how to see an inefficiency, but you can see a breaker block. That's one. Now, for this week, that was for previous weeks, it can actually still, price can actually still come to retest level multiple times. But now for this week, now what will you be expecting? This is a potential immediate rebalance. And what is an immediate rebalance? An immediate rebalance is one of the strongest PDRA. We have about 3 strong PDRA, and the strongest, there are a lot of PDRAs, but I have about 3 strong ones. The first one is the immediate rebalance. The second one is an institutional order flow entry due, and the third one is a balanced price range. So those 3 are very strong PDRA in terms of price delivery. Now, this high was traded through by this candle on Friday. That was after the news release of NFP, non-farm payrolls release. It was traded through on Friday. Now, you can see it immediately does what? It bounced off it. That shows you that is strength. Now, so an immediate rebalance should, like, if you kick a ball to a wall, you should expect the ball to bounce back. So that's like it immediately bounced back. So that's how it should act as in price. Like, I'm explaining this to the layman, easiest understandable means. Once price reacts to that level, it should give that kind of trampoline effect. Now, how do you know if this is a real immediate rebalance or if it's actually like a deception in price? Now, I used to use this analogy. Like, are you for real? Like, let's say you have a colleague and you saw his dad in a Chevrolet, and you're like, bro, is your dad having the Chevrolet? Are you for real? Like, you didn't tell me your dad owned a company or something to that effect. So you'd be like, are you for real? In terms of, is this really your dad, or I don't understand. So the real truth is, okay, if it really is that, then there has to be something he's doing that made him have that Chevrolet. Now, for this immediate rebalance, if you ask it like, are you for real? How do you know if it's for real? Now, an immediate rebalance should not get a second repricing. For high probability immediate rebalance, they can be exceptional. So immediate rebalance should give you a trampoline effect. So if this gets a second repricing, it becomes low probability. It doesn't mean it won't send price higher, but it becomes low. In that instance, I like to sit still. You don't have to risk so much just when the price is telling you, I don't think I'm going to go higher. So now, the answer given tells you deeper discounts will be given. So if this actually gets a second repricing, it tells you what will actually be going down for a deeper discount. I mean, a second reprice, like if Monday, Tuesday, Wednesday touches this the second time, this level at 1.2725, sorry, 1.27215. If any other candle touches this level, now you have a discount deeper retracement. That tells you, okay, we'll be coming to this 25% level. And I told you on the higher time frame that if this fails, the next level is this. So like my last defense line now, if I want to tell you, okay, what is the thing I'll be looking and knowing, okay, I'm no more going bullish, I want to sit still, I want to switch to sell side delivery. This BC over here, okay, once it gets overlaid by a body, let me draw it for you so you can see it. Let's say price open on Monday. let's say trade higher, then it made a displacement to this immediate rebalance. Once it touches immediate rebalance, it tells me a deeper discount will be coming. Now, what was the deeper discount? This upper 25% level. Deeper than that, this what? 50% level. If this could not send price higher, like from this level, I want to see something like an expansion in price to go high. If it fails and comes in here, immediately tells me this is very low that will be going higher. It might be will be continuing, and just the up close candle was just a higher time frame retracement. But from the monthly time frame, the narrative is bullish. So in as much this inefficiency does not get overlaid by a body closure on a daily time frame this time around, if that does not happen, you remain bullish, okay? But if a daily time frame overlay and close below this inefficiency, immediately you might want to, if you have more experience, you can switch to sell side delivery. But if you're just, okay, you don't have so much experience, there's no need for you to go in, lost your money. Just wait for more information, or just don't, there's nothing wrong if you don't trade the coming week, is it? The year is almost ending, so you should really preserve what you've been able to work hard for the previous 11, almost 12 months now. But if that level gets overlaid, that is very, immediately I change my bias and I just sit still. So that's my last line of defense. So if you want to know that last line of defense, like if there's a footballer playing, you have to pass through the forwarder, the main feeder, then you go through the defenders. Once you are able to succeed going through the main feeder, forwarders, and defenders, then there's a probability you might actually have a goal by going through the keeper and then scoring a goal. But if you cannot successfully beat, well, there can be exceptional cases by footballers. Let's say, for example, Ronaldo could just do from a main feed and shoot it directly into the post. But usually, you should be able to, sorry, that's a table, by the way, that made the noise. You should be able to overcome those defense line. So now, the last line of defense, my defender is this line. If it gets overcome, then bullish buy side, that buy side delivery becomes very low probability, and it means it might actually fail. So that's my last line of defense, if you want to know that. And the buy side drawn liquidity remains 1.28115. So before I proceed to the European dollar, the last level for this British pound, remember to subscribe if this is your first time, so you can get notified once I drop a video like this, or when I do my midweek analysis telling you what I'll be anticipating on a daily basis. So this is the level I told you initially, the week consequence encroachment. I won't be doing that again. Now, a very, very key important lesson. So for those of you who wait to this level, that's why I keep the information. Important information are delivered towards the mid. Well, let me just be. Here we'll have the daily premium CB, okay? Its low is essentially the weekly CB consequence encroachment. Now, that would take me to the weekly time frame for me to tell you what I want to say now. Here on the weekly time frame, we'll have this inefficiency, which is a sell-side imbalance, buy-side inefficiency. What makes that a CB is that price closed only down close candle. There was not an up close candle, so it is void of buy-side delivery. Okay, now this is how I'll be using it going forward. This is now an order flow determinant. Remember what I told you about order flow determinant? There are key levels that tells you whether price will be going up or down. That was told to you at the beginning of the video. Now, its consequence encroachment, remember now we're not using main threshold, is a key level of decision. That is, a successful close above its consequence encroachment on a higher time frame basis is an indicative signature of strength, of an underlying strength, and vice versa. Vice versa is, if price fails to close above the consequence encroachment of this inefficiency, then it's actually weak. Like price is not so strong. It might still go up, but in as much price does not close above it. On which time frame? On the daily and on the 4-hour time frame. So if price close above this level on the 4-hour time frame, immediately like we're really going to be going up, going into December, probably even into 2025 January. But the consequence encroachment is said, so you begin to watch price, and I told you how to get the consequence encroachment. Once you highlight your inefficiency this way with a rectangle, you use the settings and toggle on the middle line, then it will split into two, then you know the midpoint of the inefficiency. So you can also see that the consequent encroachment of this candle week is essentially the same level, not exactly, essentially, that's relative, almost approximately the same level as the consequent encroachment of that week consequent CB, which was the sell side imbalance, buy side inefficiency consequent encroachment. And from experience, once 2 or 3 higher time frame PDRA overlaps, that is, if you are seeing a breaker within a bullish order block, within an inefficiency, that tells you that is a very strong array. So for body to close above this strong array, it actually means there is weakness in price. What I mean in terms of multiple stacking of PDRA, you can see here, we had the breaker block, right? We had the CB, we had the BC, we had the order block, 1, 2, 3, 4. three PD arrays. What happened? Did they fail the respected price? So now you want a failure for this one to know if you'll be having. So imagine this level failed, will actually be going for sell side delivery. But the fact that it didn't fail was why we had the buy side delivery previous week. So to the European dollar, here we're on the European dollar. Let me see the 4 hour time frame if there's something I want to touch on. Let's see. I think it's still the same narrative here for the 4 hour time frame. There's no much ambiguity here. It's still the same level. Yes. So to the European dollar, I'll start from the monthly time frame like I did for the British pound. Here on the European dollar, we had this 8 weeks consecutive sell side delivery. That was throughout October, throughout November. We had sell side delivery. We've been going lower, and the same signature in the British pound. What happened? Price retrace going into November closing. And what happened December? We open trade very close to the consequent encroachment of November still. Look at it. This was what? November still consequent encroachment. For me to discuss what this would act as is beyond the scope of this video. It would only lengthen the video. Let's be focused on what we're anticipating for next week, right? So back to the daily time frame. So from the monthly time frame, we can see that the underlying narrative is bullish. I won't be going on the 3-month and 12-month time frame like I did in previous video because, you don't need so much because price is actually trying to change trend. So once it's doing that, you just want to be taking low hanging fruit objective, things that are easy to reach for, very easy target. Okay, you don't want to be too overzealous in price. So to the weekly time frame, I think I should make this faster than the British pound, hopefully. Here we had an up close kind of previous weeks. Okay, that was the week before this last week. That was 2 weeks ago. We had an up close candle. Price retraced to some random level. No, it retraced to a level that was told to you before the week opened. Here, I told you about this inefficiency. Here, I won't be doing so much of that because I want it to be fast. You can just check that video. I'll drop the link in the description. Here is a CB. So it's a sweet spot for what? For discount retracement, and it should act as a what? As a bullish inversion fair value gap. An inversion means an opposite of a already anticipated level. Let's say now, if somebody, let me just give this example. If you say a white shirt, and I say, okay, let me see what's the inversion. The opposite of the white shirt is going to be black, right? So this is a CB. Usually, this CB, let me make the hue visible. That level there you're seeing in orange there. It literally should what? Send price lower. But price overlapped it to the upside. Then it should act as what? As an inversion. Instead of acting as a resistance to higher price, it should not do what? It should not act as a support for higher prices. That was why that level was important to me. I outlined it, and you could see how it delivered well. So for this coming week, we'll have the same narrative. This relatively equal highs was told to you. It was delivered. I even had a video where it was delivered live during NFP release. As NFP release, price just went up higher and delivered 1.06099, which was told to you beforehand. So I can just play a repack of the video so you can just listen for a few seconds where I told you we'll be seeing these relatively equal highs. And also this high was the low hanging fruit objective. This high, that was Friday's high. That was 29th November, 1.05973. So just listen for a few seconds. We are going to be seeing price going to first this buy side 1.06099. Next, this inefficiency. That's it. Okay, so you can literally trade long to that level if this supports price, like price refuses to close below here before NFP release. That's Monday, Tuesday, Wednesday, Thursday. So I think that should be enough to convince anybody, not confusion, okay, to convince you like, okay, this is really happening. Because the video, you can look at it, is days ago, if not a week now, like about 7 days ago. So I told you this beforehand, and price delivered right there Friday going into the closing for the previous week. Now what I was anticipating as a discount retracement, the same narrative on the British pound is what I'll be transposing here. Usually I shouldn't even do this, but for the sake of, there might just be someone who is just, he doesn't really understand, or she doesn't understand how much of analysis has to go into this and how to transfer a narrative from a peer to another peer. I'll just be doing that very quickly. Here we have the first level, and yeah, you can look very closely. The British pound actually have more strength than the European dollar. Look at it here by yourself. The British pound already had challenges inefficiency. This was the CB. Look at the European dollar. it went there, but it's yet to even trade to the midpoint of that inefficiency. Why the British pound already gone like really close to the midpoint, which is the concentrated encroachment. This narrative you'll be looking for here, the upper 25% level, which is it's like a green line, is a little bit faded because once they are too obvious, it begins to act as an obstruction to my eyes. I don't like so much of annotations on the chart. It does obstruct me seeing the real, narrative in price. So I made them faint and almost invisible. For a new person, but you can actually see that that's about like green, light green. So previous week still upper quadrant level. If the bullish immediate rebalance on the daily time frame isn't real, and I told you what I mean by real, like if somebody tells you like, okay, I'm going to Ethiopia in Africa, you'll be like, are you for real? What are you doing there? So like, are you for real? How do you know? So if the immediate rebalance fails, it immediately tells you, if you hear that noise, that was a vibration, sorry. It immediately tells you this is actually weakness in price, and it means that immediate rebalance is not a real one. It is just like, okay, it acted on Friday as an immediate rebalance, but now we will not be trusting it as a real immediate rebalance because it failed going into Monday, Tuesday. That is, if a body touches that level, I'll be going here on the daily time frame to show you what the immediate rebalance is. If it fails, then this can come in as a draw on liquidity for discount manipulation. Price does two things. It does a manipulation before accumulation, then what? Then expansion. That is when you are bullish. When you see price accumulate, it goes down. It might actually do a Judas swing. So when I say Judas swing, like Judas is like a fake. It betrays, like it deceives people that okay, I'll be going down. Then the street money begins to chase it down. Then the smart money immediately reverses and offer what? Buy side delivery and send price even to a higher premium level. Now, you want to see a Judas manipulation. Like I'm just saying the same thing. You want to see Judas swing to come down in here. Once it's come down in here, different from the British pound, this actually has so much weakness in it. So it's very permissible for body to close below here. So I say a body might close below here. It's completely permitted. Okay, it's permitted for a body to close on this one. And even this one now, we have for this previous week's day consequence encroachment, which was 1.05142. Body should respect this level. It's fine if price traded to this level. Like if price falls to this level, unlike the British pound now, for high probability, you don't want to see price going that deep, but you permit it for the sake of manipulation due to release of news or whatever might be going on. So I don't know if this comment will be FOMC. I haven't checked the economic calendar yet. I won't be doing that in this video to only elongate it. So it's fine if price come in here, it's very okay. And what you actually find for a demand is, if in price comes in here, it has to show this signature of closing above this level. That is, if the wick actually goes below there, you want to see the body close above 1.05142. Once a body can successfully close above that on a daily and on a 4-hour time frame, okay, then you might know, okay, we are still bullish, there's still strength in price. If it fails to close below that, you wait for more information. There's an exception to the rule, which is Mohawks. Mohawks, well, that's beyond the scope of this video, okay? So we'll be discussing that on other videos if the need comes. But these are the discount retracement level. So transposing it now to the higher time frame, what do you want to see? Transposing it from the British pound is the same thing. The only exception is this might want to go lower than the British pound. So I'm really telling you now, this pair is going to most likely be a weaker one to the British pair. That is what we call relative strength analysis. It's another concept on its own. I have a video here, you can check it out. The name is relative, I think, is it how to, I don't know, but just type relative strength analysis, you'll be able to see the video here. It's on this channel, it's very short. So that was where I tell you how to, even on a 1 minute time frame, you can decipher and be able to know, okay, this is going to be an outperformer, because sometimes, let's say you are trading the indices, you have the NASDAQ. The NASDAQ futures might trade like 20 handles up. Why the mini S&P is just in a range, like it's just ranging, probably even you struggle to get 3 handles. The reason is because there is what we call relative strength analysis in relationship with the dollar index. So there's a certain signature which can be depicted in the form of SMT or other higher time frame perspective that makes another pair outperform the other pair. You might be trading, let's say you traded a British pound, you might have had this experience, and you just, like, let's say you went long British pound, and you just take a look at the European dollar, and you saw the European dollar had done 6 times the move the British pound had done. Then you were asking, like, why didn't I trade the European dollar? Why didn't I not trade the Why didn't I trade the European dollar? Why am I trading the British pound? The reason is because you don't understand what we call relative strength analysis. You have to veer that out with the dollar index to be able to know, okay, this pair, once you see I won't be going too deep into that. But once you know how to do that, on that video I did, I think, a reasonable, teaching on that. Once you see that signature, you will know, okay, I'm not going to be, even though you see some people be like, okay, I only trade European dollar. If you're a forex trader, you should be considering these two pairs, European dollar and British pound. If you're in this index trader, you can be considering the Nasdaq and E-mini S&P for if you want to be very vast. But if you just, okay, I want to be a specialist, I don't want to bother myself. It's important you have this, because it will improve your trading, it will reduce the frustration you have with like what's going on, because it can be for a long scale. Like throughout this week, the British pound has been the lethargic one, like it's been the lazy one. There's a concept called Six Sister concept. Well, I'll be done with those concepts now. What will be you looking for as a next buy side journal liquidity is, sorry for veering off course. I just talk on more information for whoever does not understand what relative strength analysis means. But this is not enough. The real thing is in that video. I can drop the description also and the video in the description. The next buy side journal liquidity is 1.06298. Note this level. You can write it down. So when price deliver, and I'm telling you, come probably next week Saturday or Sunday, you won't be like, this is cherry picked. No, it's actually told to you before the market open. Now, the buy side journal liquidity, how will you know we'll be going there? What are the signatures you want to look for? Like, okay, these are signatures that support the fact that price will be going there. The weak consequent encroachment, just like I told you on the British pound, here is it. For strength, anticipate a higher time frame body closure above this level. That is 1.06036. You want to see a higher time frame body closure on the 4-hour and on the daily time frame. You want to see a body to close above it. Once you see that signature, then you can trust that, okay, we'll be going higher to target the next buy side journal liquidity, which was what, 1.06298. So I think I've done clarity with that. Give a thumbs up, subscribe if you haven't, just a reminder. And if you want to be overzealous, okay, since this, normally if you have a six sister, let me explain what that means in just 30 seconds. Six sister concept is we have two pairs that are very closely related. Let me use the forex pairs. We have the British pound and the European dollar. They are very closely correlated in terms of price delivery. When one is going higher, usually they go higher together. This actually the pegging. When one goes up, the other goes down. There are some exceptional cases, but normally you want to see it, they both go higher. A six sister concept is the British pound, like in this case, let me go to the daily time frame to show you a more clearer view. Look at here. How many inefficiency did you see here? There was almost no. Like, look at here. There was a little one here, and I think that was the only inefficiency throughout last week. Like, no inefficiency. Go into the British pound. This is an inefficiency here, one. And I think there was one here. So the real thing is, the six sister is the one that is slow. Like, it's sickle, it's lethargic. It will not have so much momentum in price. Here we had 1, 2, 3 up close candle. And also, we even made a higher high, trading to the midpoint of this inefficiency here. Let's go to the European dollar to show you now. You can see the European dollar, the up close candle. This one was like almost an indecisive candle, very weak in price, like anemic. So you can use that narrative. You can see the strength in this one. It had a higher up close candle, but this one had a very closing to indecisive candle. It went higher, but you can't compare it to what the British pound has done. The British pound, so if you want to have a sister concept, is when the weaker pair wants to catch up with what the stronger pair already done. The British pound already traded to its inefficiency, so you want to see the European dollar to want to make up for its weakness. So next week you might be seeing some expansion here. But if you want to be buying, to be honest, you should focus on the British pound. That's where you see it. But if you have relative strength analysis, it switches. The AM session might favor the British pound, while the PM session might favor the European dollar. That's just the explanation. I exceeded 30 seconds already, but that's just it for you if you want to know what the 60 concept is. So you want to see a body closure above that weak consequent encroachment, like I showed you on the weekly time frame. And the inefficiency here, this inefficiency is a draw on liquidity. So you want to see how price, how price will be trading to this level. And the same narrative, the main point, the consequent encroachment I will be doing again here. For inefficiency, is very simple. For a week is a little bit complex because you have to know how to use your Fibonacci. But for the inefficiency, once you outline the level, which is from the low and high of the inefficiency, you just go to your style and you toggle on middle line. Immediately it automatically splits it into two, and this is the consequent encroachment. Now this is the midpoint. So you want to see if body is wanting to close higher, but you don't demand that. Okay, once you just want to see is this week, does it close above it? Good. Then we should be seeing buy side journal liquidity at 1.06298. That is that for the European dollar. And you can see this inefficiency over here. So if you want to be overzealous, you just want to be doing things exceptional. You want, okay, let's go up, let's just keep doing it. Like, your adrenaline is too high, and you just want to be doing things that, okay, you just want to be aggressive trader, you want to be swinging for you want to just do something very high, which I don't think is really important you do that, because you're not here to show off for people like, okay, come and see. You are here to make your hands meet, to make your bills meet, to meet up your needs. If you're a family person, you have children, and your job might not be enough to finance their bills, going to college, their food, and you want to have this as a second means of income. So that's why you should have that mindset. It's very important. So are you really doing this to show off, or are you doing this to build a career? And hopefully, if it eventually helps you to quit your job, once it begins to pay you at least more times than none, like 2 to 3 times of your job payment consistently, at least for about a year or so, and you're able to make your ends meet well, then you can consider quitting your job. But this should be the mindset. You should not be, okay, I want to show my ex. She just, she trashed me for a guy with an AMG. I want to show her I can make. No, there's no need for that nonsense. You just focus on what you're doing. Okay, long-term perspective. If you are just, you're not married, you're single, at least you have parents, you have maybe friends, brothers. You want to help them. They might not be as doing, fine in their jobs. Some of them might still be in school. So you want to make their hands meet for them. And you have to first make your own hands meet and have enough surplus to help them. So that's why you should not be so overzealous. Okay, let me show them. No. Just, aim for the low-hanging fruit objective. Once you do it consistently, it's enough to make you a living. Okay, so that's just a encouragement. It's just an advice. You can throw it away if you want to, but yeah, it's your business. I don't care what you do. You choose to live your life the way you want to, but I think that's a more conservative and reasonable approach to live your life in that aspect. Here we'll have the inefficiency, which I already told you this inefficiency in my midweek analysis, I think on Wednesday. Which day was this? Yes, on Wednesday before Thursday began opening in midnight. At midnight, I made a video to tell you what I'll be expecting for Thursday going into the NFP. You can watch the video. If you need it, I can drop the description in the link. Maybe I'll just do it. I'll drop all the videos I talked about. I told you how this inefficiency, it should do what, and I told you what it should act as. Let me try to make it more clearer, okay? Here is it. It's a daily what? It's a daily CB. And I tell you, an array that gets disrespected should act as an inversion. So if you're expecting a normal array now, the function is to send price lower and it gets disrespected, then it should act as a what? As a support to send price higher. Let me use this narrative. When they teach you support and resistance, you say, okay, resistance should send price lower, while support should send price higher, right? So if resistance fails, it should act as a support. This is not you can just use that as an understanding. That's not actually what happens behind price, okay? There's more information to that. But you can just use that knowledge. So if somebody's like, you're struggling to understand inversion, I have made it a simpler terms in a common language in the financial industry. So I anticipate an inversion that is an overlapping to the upside. That's why I say a bullish inversion fair value gap. And it was outlined beforehand. So now, the takeaway for this now, how you want to use it next week is, does it still remain an inversion fair value gap, or does it fail? That is, does it still act as supporting higher prices, or does it completely fail? That's what you want to do. If it fails now, I told you the level you'll be expecting. This what? Lower quadrant. You can see that upper quadrant of that tail consequent encroachment. I told you on the weekly. You can just rewind the video to find it out if you're having confusion with it. And the inefficiency, the low is almost the same low with this inefficiency. They are like essential, almost the same thing. So that level is very strong. But if it feels lower, because this is the European dollar, it has weakness in it. You can see this line was the consequent encroachment, which was the 50% of that tail's, the 50% of that tail level. That's the midpoint of that tail. So that's that for the discount level. And if this is for an information, so for those who stayed this far, this is an extra information. Should price come down, fails to respect this inversion fair value gap, disrespect this other block, and comes down in here, you want to see a potential for it to want to re-overlap it. So if it does this again and goes above that fair CB, which is the sell side imbalance, this one, sell side imbalance, buy side inefficiency, you want to, it should return to it. If it overlaps it successfully, it should return to it, just something like this. Once it returns to it, then it should expand what? It should expand higher. So that's something you can see. So if you get disrespected, it does not mean, oh, no, we're going bearish. No, there's more. You have to be more flexible with price. Okay. So I'll be bringing this video to a close as soon as possible. And there's something I want to discuss on the lower time frame here. So if you enjoyed the video, you can, encourage me by giving a thumbs up. And remember, if you're here to subscribe, probably just keep through to this part. You can also subscribe for more information. And on the 4-hour time frame, there's something I want to explain. A balanced price range. I told you there are 3 strong inefficiencies. PDRA, which is the institutional order flow entry due. which is a partial entry into an inefficiency, be it a CB or a BC, with a rejection. That's an institutional order flow entry deal. We'll have the immediate rebalance, and the third one is the balanced price range. So now, a balanced price range is a range that has a buy-side delivery that was immediately followed by sell-side delivery. I'll repeat that. A balanced price range is a range that has a buy-side delivery initially that was immediately, not in the next 3 consecutive candles, like after that first candle that separates the inefficiency, the next one overlaps that buy-side inefficiency with sell-side delivery. That's what a balanced price range is. That's for a bearish balanced price range. For a bullish balanced price range, you want to see a sell-side inefficiency, that's a CB, that is immediately offered and followed by what? A buy-side delivery. That is a sell-side delivery that was immediately followed by a buy-side delivery. Just like Michael Alderson used this narrative, like a paint roller. If you are, for those of you who do painting, probably paint houses, or maybe you're just an artist, you do some painting. Once you paint a level, let me use a house painting now, a wall. You take your paint, you apply it on the roller, and you go up. There will be some packet, like you'll be seeing some levels that the paint has not colored well. So you want to do what? You want to bring the roller down the second time to do what? To balance the paint delivery on that surface. So this is the same narrative here. So price might be so excited and move quickly. So once it comes down and rebalance that level becomes balanced. So as a painter, once you come down, there's no more unpainted sections or segments on that wall area you have, on that surface, that specific area where you're painting. You do what? You go to the next level. You don't stay all day long just going up and down like you're not a child. You want to finish your job and get your pay, right? So but you want a balanced painting, not something that someone come and look at me like this level is void of painting. So that's what price does now. We went up higher. Let me draw something so you can see it. Went up higher here, buy side delivery, immediately followed by what? Sell side delivery. This level, this inefficiency, we have both a BC and a CB. That immediately becomes a balanced price range, and this is a bearish one. And if it comes in here, price should send lower. So now, one of two things will be happening. Price will be coming in here depending on when it comes into. So if it comes in here on Sunday, okay, it might stop in here on Sunday and go. I don't trade on Sundays, okay. It might stop in here on Sunday and go lower. So it's an opportunity for someone who, if you have a model that works on Sunday, that's when price open 6 p.m. New York local time. That's the Eastern Standard Time. You want to see it going lower. So if you have issues that, okay, what is the time? How do you set it? There's a video on this channel, how to know the exact time to trade the silver bullet in your country. So there in that video, I told you how to know the time, that it works 100% of the time. I told you 2 ways on how to know the time, how you can set it on your trading view. So you check that video. I won't do that much talking here. So if this comes in here as a balanced price range, this is a bearish one. It should send price lower initially. So if it does that, then you are waiting for something for it to get overlaid by a body. Yes, that becomes what? A disrespected PDRA becomes what? Some of you remembered it is an inversion. So once a body overlays it, let me draw that arrow because I think the more you see, the more you understand. So here we'll have buy side delivery. So this was inefficiency up and we came down, right? We displayed to this level. So if a body comes in here, it's fine if you see some retracement. But yeah, you as a trader, you might retrace even deep to the levels I told you for discount retracement. I won't be recapping that. You want to see an overlaying of a body as a signature. This is what, okay, you'll be like testing this level. Okay, is it acting the way I want it to act? Once it overlaps it here, then you want a return to it. Once it returns, you want a return to it in a format of something like this. It should return here lower. So once it returns here lower, you'll be anticipating what? The final expansion, which will be the real move. That one might even actually have more strength. It will actually go up higher. So this becomes an inversion balanced price range. And also this is CB here, which is a sell side imbalance, buy side inefficiency. You also use that as an inversion fair value gap. Don't be so pissed out by the terms. You get to understand it the more times you actually watch the video, and you just get accustomed to it. Everybody learns at it. I wasn't born with the terms. I also with experience learned it. So here we have on the 4 hour time frame, there's something I want to explain which I just skip, which is a real example of how a balanced price range should act. Now you'll see it in hindsight. So I told you the future expectation. I think I should have done the hindsight first, but I've just done one. So I'm looking for the balanced price range. I can't find it. It's just okay. Here it is. Here here we'll have it. Remember to like, comment your questions, okay? Just feel free to do that. And you can put in a notification if you subscribe so you can know once I drop a new video. Here we had price coming. This is a balanced price range. Remember I told you it's a buy side delivery that's immediately followed by sell side delivery for a bearish one. Okay, so here we had what? The same signature there. We went up and we did what? We came down. Right there. What happened? We came even, why am I just not drawing this well? We came down and we came even lower, right, to this level. That can happen Sunday, Monday, or Tuesday on that anticipated one for the future. That's for next week. As it came lower, it expanded up into this level, right here. That's balanced price range. And what did you see there? It closed, it respected that level, and immediately does what? It came down here. The street money will immediately be like, oh, that is sell side delivery. Let's begin to go in. So this is the manipulation actually. Now, the real move happened when you saw what? Price expanded what? Higher. You can see that it went higher. And what happened going into the coming week? We fell lower? No. We kept going higher. You can see that we didn't come lower. So now the inversion you want to see now, when it came down here, it fails again. You keep waiting until it goes up. It went up again and it came down here. To what level? Look left. I'll extend it right so you can see it. Immediately it touched here, right here, 4 a.m. That was London session on Thursday, December 5th, 2024. We expanded higher and higher and higher. Now, I'll extend the level right for you to be able to see it more clearly. Here we have the balanced price range. Let me see it. This is BPR. That's like an abbreviation. I don't want to write it in full. Like writing balanced price range, it takes a lot of time. So I'll just do the extend right. And what did you see? Price came into this balanced price range, right? And what happened? It went higher. So the same narrative, price might not do a double coloring, like failing twice, like it failed here once. After it respected once, it then overlaps it and still failed twice. But remember, it did not respect it here. Once it failed the second time, the first failure was this. It made it like a deception. Then the second time it failed, it acted as what? Supporting price. So if you actually trade the inversion and you had a stop here, the second time you trade it and expect it to run. If it fails the second time or third time, then you want to sit still. It's telling you information that I might want to go lower. So the same anticipation you'll be having going for next week for this balanced price range is fine if Sunday go in there and retrace going Monday into Tuesday to form the low of the week. But once you get overlaid by a body on a higher time frame, I'm using the 60 minutes, but literally you should focus on the 4 hour once I talk about higher time frame. You immediately be doing what? You'll be using that as an inversion to capitalize on what? On buy side delivery. So hopefully you find this video impactful. Let me touch real quick on the dollar index. Okay, there's something I skipped here on the European dollar. As NFP was released at 8:30, if I can upload the video I'll do that, but if I cannot, let me just say it here. NFP went up. I had it live on that video. I think I really should try to upload it, but if I cannot, anything can get into the way, so don't expect me to do that. If I do it, fine, you enjoy it and you watch it. Here we had the manipulation. We went up higher, okay, and we distributed coming down lower. Now, there were 2 levels I outlined as sell side draw on liquidity on that time. The first level was the London sell side delivery, which was this level here. So price went higher here, manipulated. I was not like, oh, look, like we'll be going higher. This was what retail will be expecting. Like, we've been going higher Monday, let me just say Tuesday, Wednesday, Thursday, and Friday. It is very, very reasonable to see a retracement. And that is why there's a model called the TGIF model. It's a model that is actually traded only on the Friday. It's a retracement into 70 or 80% of the range of the week. That is, if the week had expanded higher, so you want to pull your fib and delineate a 50, the lower quadrant, which is the lower 80% or 70%. You can actually use it depending on your understanding. You can actually use that as 20% or 30%. If you are good in maths, you should understand what I'm saying. So then price went in higher as a what? As a Judas swing. Okay? And now what happened? We distributed lower to some random level. No, I'll outline this level. So let me just make it visible on this time frame here. I told you what the level would be. If I can make the video, I'll try to. I can just upload it and make it as short as possible. So that was the London session sell side liquidity. And I told you I want to see price go in there to set up the stage for a what? For a second stage redelivery for the AM session silver bullet trading model. So I talk about 2 trading model now. This is the TGIF incorporated within a silver bullet time window. So knowing fully well that price will be retracing to 80% or let's say the full range 100% now. You want it to reduce to 80%, which will be like 20% of out of the 100%, like 100 minus 20 is 80, so that's the 80%. Then to like minus 30%, that would be like 70% of that level. This is the London session sell side delivery, and it was delivered here about 9. Let me see. 10 o'clock. 10 o'clock. That was the time window for the silver bullet trading model. It went in there, and there was a news that was released at 10 a.m. That was, if you check the economic calendar, you set your time to the use. Well, I think I did a video on how to set a time on the economic calendar also. If you use baby pips, they say, well, you just set it to Eastern Standard Time. It should be UTC 4 or UTC 5 or GMT 5. It doesn't matter if your country observes the daylight savings time. When they say daylight saving time, it's actually a delay in 1 hour. Some countries don't observe it. My own country will not observe that delay. But in the United States and Germany, I think they observe that delay. But it doesn't matter whether your country observes or not. Once you make that settings, it works all the time. There just might be 1 hour delay, but you should stick to the time. Once it's 10 o'clock, that's the model. And we delivered sell side, and we even went lower. The PM session then did a little retracement. So I've done a lot of talking and discussion, and I think somebody should be able to glean some insight. And this level, finally, is a 4-hour time frame. This is a order block there, a bearish one. Look closely. You see this 1, 2, 3 consecutive up close candle. The midpoint is this level here. This is a main threshold for an order block. So we have 4 up close candle, which was consecutively up close candle. This is the midpoint. So does it act as an ideal bearish order block? An ideal bearish order block should send price lower, or does it fail? So its failure is a plus for buy side delivery continuation. So once it fails, it should go up delivering buy side. So I'll be ending the video very quickly as some noise are coming. I don't know what's going on. So sorry if you heard that obstruction. I think this should be better now. So on the dollar index, if you only trade the forex pairs, I think there's no problem. If you this is dollar index, you might pay attention. When I go into the indices, that's what people trade in Nasdaq and the E-mini S&P. That's for the futures traders. And here we'll have the dollar index. Here, this is a level which was actually tagged an immediate rebalance initially. It didn't perform as an immediate rebalance because immediate rebalance should be immediately repriced by price and sent higher. Yes, it should be repriced too by price delivery and sent higher for a bullish one. We've spoken so much on immediate rebalance, I won't be doing any more talk on that. But what do you want to watch on the dollar index here? You might call it Dixie, whatever you call it. It's just a dollar index. You know that there's United Dollar State Index. Here we have price index inefficiency, which is a BC, a buy side imbalance, sell side inefficiency. Let me make it visible this way. Now, antibody closes below the midpoint, which is the consequent encroachment. That's on a higher time frame basis. So when I say higher time frame basis, it means just the daily time frame and the weekly, an exception of the 4-hour time frame. A lot of educators and tutors might tell you, it's based on where the array is actually highlighted or annotated. This array is actually a weekly array. You can see that it's a BC, that's buy side imbalance. You can call it a fair value gap. If it's any level I outline on the weekly time frame and I say higher time frame, it's the daily and 4-hour. But now I made a double repetition of higher. So a higher time frame, it means on the daily time frame alone, if price closes below this midpoint, then it will continue lower. But if it fails to do that, then that tells you that that's actually a retracement to discount for an expansion to buy side. But since we're bullish for the forex pairs, you should expect an inverse for the dollar index, which is the inverse should be bearish, narrative, that is sell side delivery going into this coming week. Now, if we're going to be transposing that as an opposite, which is because once it's risk off for dollar, it should be risk on for the forex pairs, and once it's risk off for the dollar index, it should be risk on for the forex pairs. I hope I said it right. Risk on for dollar, risk off for the forex pairs, and risk off for the forex pairs, risk on for dollar. Just the opposite way. That's the inefficiency. You want to see price close below it if you are bearish, since we are bullish on the forex pairs that I just told you. How deep should we reprice to? Here we can see, this is it. For those who have been like, how would I use a Fibonacci? This is an example. You pull it from the low to the high of the candle. Now, for an up close candle, you use the closing price to the high of the candle, and then you get the 50% level. The 50% level of this dollar index is 106.351. So this level is the midpoint. So it's previous week's week consequent encroachment. Yes, this just concluded week. The week's consequent encroachment. Higher time frame body closure above here means a buy side delivery continuation, and a failure to close above here means what? A potential for a sell side delivery. Hence, this will serve as a what? As a premium entry for a discount target. Well, I hope you understand that. If price comes in here and fails to close there, which is what you want to see since we are bearish for the forex pairs, the European and the British pound, you want to see it what? Draw lower to this inefficiency. And how will you know this will be a sustained sell side delivery? Once price begin to close below the midpoint of this BC. So to the Nasdaq, I'm done with the dollar index. I won't spend much time as I did on the other pairs. Going to the Nasdaq. So we've been calling Nasdaq higher, and now we are trading all-time highs. That level 21,340.75, that's 3 ticks, was called to you, if not 2 weeks before it delivered. And this sales also was, well, I don't need to say so much talking here. I want to make the video end now in just less than 3 minutes. Here we'll have the dollar in the Nasdaq futures trading at an all-time high. This is an all-time high, okay? The Nasdaq futures is trading on an all-time high. How do you want to use this? Number one, with my experience, I've been more trained with trading inside the range, not like a consolidating market, like a market that has to the left of it a buy side or sell side delivery, liquidity, inefficiency, order blocks. Like it's easier that way. But if you're having an all-time market, that is a market that is making a new high with nothing at the left of it. Like now, let's say BTC was about hitting 100,000. It hasn't done that since the history of BTC. I think about 2008. That's an all-time high. How do you trade those all-time high? Because there's no, I won't try to wrestle the underlying narrative. But December is when people, cash in their money. Those who invested in the stocks, they want to take in some money and, whatever they want to do for the end of the year, they want to take out the money. So you might not see very nice price delivery. But if you want to insist on trading, there's no need of looking for sell side delivery because we already consolidated here. We ranged after fulfilling this buy side and we expanded. So you just be looking for just a simple, straight to the point, a displacement to a discount level or taking out a short-term low as a sell side liquidity. So what does that look like? Look at this low here, okay, at 20,424.75. This low here at what? 21,000 here, 444.25. They are almost the same thing. That immediately makes it becomes what? A relative equal low, and it will act as a what? A draw on liquidity. So this low here, I'm just giving you what you might expect to see. So 21,424.75. Let me make that level there. 21,424.75. So that's the sell side liquidity. I just annotated it with a horizontal line. So it's denominated here now as relative equal lows. You want to see price. If price, you don't demand that, okay? But if price does that, and how will you know? There are certain things I just want to make the video ended as soon as possible. So once price is going down, it should see a retracement because we've been pressing up higher. Look at this inefficiency. You watch closely. Does this inefficiency get violated? How do you know that the low of this inefficiency, if once price trade below that low, you want to sit still and wait. Now look left, there's a 2 down close candle, consecutive down close candle. This is an order block because an order block validated is actually having a change in state of delivery depicted by a fair value gap. So if you see a bullish order block, a change in state of delivery is actually like a BC, which is a buy side imbalance, sell side inefficiency. That's what validates it as a not okay down close candle. No, not engulfing candle. That's not what it is. Once you see that change in state of delivery, it's an order block. So if this is a real order block, even if this inefficiency failed, its main threshold should support price, starting from the opening price to its main threshold. If it fails to support price, which is, to me, I think there should be more of this sell side delivered. But if we're extremely bullish, it won't happen. From here, we'll just rally up and keep going. But if it fails, let's say you see it fails, so you might want to wait for more information. If I'll be trading, I'll wait for more information. Let's say I'm trading the indices, I'll wait for more information. Does it rally and displace higher? If it displays higher, then you'll be looking for a return to a fair value gap about here, and you just trade higher that way. But if it fails and comes to this sell side, you wait for more information. How does it act? Does it take the sell side out as a total soup, which is a liquidity engaged, or does it act as a displacement to send price lower? If it does as a total soup, which is what I'm expecting, then you want to see what a displacement, whatever model you use, whatever setup you use, it doesn't matter. You look for your buy and you follow your model, targeting the next high. Okay, that's how I know to trade all-time highs. So you just wait for, you don't try to, okay, I'll keep selling. Don't do that. You will keep stopping. You get stopped out multiple times and you will lose your account. You wait for a displacement. Don't arm wrestle the underlying buyers. Once you wait for a displacement, which would be to a downside this time around, it will take a short-term low. And I told you the one that I like, which is this relatively equal lows at 21,424.75. Then you wait for a displacement to target buy-side liquidity. And the easiest low-hanging fruit buy-side liquidity is here at 1.1. 21,669.25. I'll just annotate this level and bring the video to a closure. 21,699.25. So that level at 21,699.25 is the buy side draw on liquidity. The same narrative you applied for the E-mini S&P. You just wait for a displacement to sell side. This low, this you can see this was a lower low. This low on the, let's go to the Nasdaq real quick. Here was a higher low. This low has not been taken out on the Nasdaq, which was this low at 18 o'clock, that's 6 p.m. But the low here at 6 p.m. in E-mini S&P was already taken out here. So this, I don't think this should come again as a repricing. This might be the one that will actually respect this order block, and then you wait for an expansion to buy side. So this order block should be respected for high probability on the E-mini S&P. But for the Nasdaq futures, you should anticipate a manipulation into that sell side liquidity. It's just too clean. Then you see an expansion. So that's that for my opinion. It's not a trading advice. I'm not a licensed CPA or a financial advisor. I'm not that. So I'm just giving you my opinion as to what I'll be expecting for the speculations who care to want to know. So hopefully you find this video impactful. Have a great trading week ahead. Enjoy your weekend and give the video a thumbs up and subscribe if you haven't. Thank you. Feel free also to ask your questions. You just do them, and that's how I'll make my video to answer and suit your questions.